All right, let's kick things off in Nigeria. You know, we love reports. Look at this big, beautiful, new economic outlook. We're going to be doing a lot of this week. This is from Afrinvest. And let's put the title up on the screen here. Beyond Silver Linings, Statistical Gains and Social Strains. There it is. There it is. There it is. These reports, they take work. Nathanael Disu is with us. He's an investment research analyst with Afrinvest. We're going to be taking a look at the outlook second half of the year for Nigeria. Nathanael, welcome to the show.
Yeah.
Good to see you. How long did it take to put this stuff together? Huh? I had this printed out. Big glossy charts and a couple of weeks. Let's start with the US dollar and the weakness in the US dollar in your reports and how that is impacting emerging markets, where Nigeria is, of course.
Okay, yeah, for the US dollar, so let's start by identifying what is making the dollar to be weak.
Yeah.
For knowing about the impact. And in the DXY index, which is like is used to track the dollar, it has declined about 11% year to date.
Yeah.
So, and everything started, give or take, around when Trump came back into power, and the whole tariff discussion has caused a lot of volatility in the market, instability, and also there's this possibility, like everybody's still waiting for the US Fed to cut down on the interest rate. So that has weighed in on sentiments in the US dollar, and also the dollarization campaign, the BRICS economic bloc, and all those things. So it has kind of had a negative effect on the dollar. And if you look at the safe haven assets, if you look at gold has done about 26% year to date. If you look at Bitcoin, it has done about 14%. So both the old money and the new money are kind of doing that. And we all know that whenever dollar is weakened, there's a lot of opportunities in emerging markets. And that's where Nigeria comes into play. And if you look at Nigeria and Ghana, there've been a lot of improvements macroeconomically. If you look at Ghana's currency has done about, I think, 30-something or almost 40%. And if you look at Nigeria, the naira has kind of stabilized. So year to date, as at when we wrote that report, the naira just weakened about 0.6%. But if you compare that to last year, half year, it's weakened about 31%.
Right.
So we've seen a bit of stability in the currency, and that has also had a positive effect on the market. If you look at Ghana market, Ghana is like the best performing market in Africa, about 27%. If you look at Nigerian equities market has done about 16% there. So there's a whole lot of opportunities, carry trade opportunities that is now flowing into the emerging market. And hopefully, if by H2 we see a rate cut, that could also drive more investment in emerging markets.
Great stuff. I'm going to flip over to, I'm going to start doing this now. It's going to be like a finance class. I'm going to flip over to the price earnings ratio. We're going to put that up on the screen. Can you define the price earnings ratio? First off, there it is. Yep, for our viewers, because we've got a regional price earnings ratio comparison. You have Africa lower than the other markets. So what is the price earnings ratio, Nathanael?
So for the African PE ratio, that's the price earnings ratio, is about 6.9 points. Then if you compare it, like what's shown on the screen, if you compare it to other global regions, if you look at BRICS, about 17. If you look at developed market, that's the advanced economies, about 18. So there's a bit of there's a discussion of if the African market is still undervalued or not. And if you look at one of the reasons why the African PE ratio is still low compared to the global market, if you look at the interest of citizens in the market. So for example, looking at the US, about I think 60% or thereabout of Americans are heavily exposed to the stock market.
Right.
But if you look at Nigeria in comparison, we have about less than 5%. So there's no much activity of citizens even in the market. So, and that can be based on different factors: the security, macroeconomic issues, currency, and everything, and income bracket. We'll be talking about consumer goods and how the income level is kind of declining. So people will not really have that much interest to invest in the market. So that has been, but on the positive side, there's also opportunities. We've talked about the weakening of the dollars and how that will drive more FPI inflows into the market. And also, apart from that, if you're looking at Nigeria, the bank recapitalization exercise would also drive in some more investor sentiment into the market. And I think it was last week that the reports came out that a particular tier 1 bank was kind of listed on the London Stock Exchange or kind of raising funds. So that would also drive in more investment in African market. And if you look at the index, particularly for Ghana and for Nigeria, they've performed really well. Compare that to US, the S&P has done, I think, about 5%.
5%. Yeah,
so if you look at it, there's a lot of activity in the African market. And also, trickling it down home, if you look at what is happening in the Nigerian stock market, there's a kind of renewed sentiment with the younger generation investing in the Nigerian market. Back, like many years ago, people don't want to invest in Nigerian stock. Like, no one would want to do US stocks and everything. But if you look at now, people are kind of getting more attention towards the Nigerian stock market. People want to buy Nigerian stocks, and which is kind of away from the norm. Before, people have been doing forex, crypto, but now there's kind of more interest, and that's good for the market also. And if you look at the NGX, they're also trying to encourage more listings on the exchange, and that would also drive more sentiment in the market.
Let's talk about uncertainty. I'm going to flip over here to the key geopolitical and technology and climate change risks to watch in half year. We're supposed to be getting, that's your global uncertainty index there, which I see it climbing up again 2025. Now, the tariffs, I suppose. Well, how big of a headwind is uncertainty with respect to the second half of this year?
Okay, if you look at the history of that chart, if you look at between 2020 2021, we see a huge spike, and that was when COVID happened, obviously. Then in around 2023, the Russia-Ukraine crisis, and now in 2025, the tariffs is also bringing a lot of uncertainty, and that will definitely still play out in the second half of the year. Just like you rightly said in the intro, that Trump has already now push back the dates to August. So there's still not more that clarity to say on what's the direction of the tariff issue. So they're still having discussions with China, with the European Union and everything. So that will still play out in the second half of the year. So until we get a full clarity on what's the direction of the market, because that has also weighed in on global growth and the like. So that uncertainty would still persist in the second half of the year.
Let's see now. You've got outlooks for Nigeria. I'm going to start with GDP. You kept that at 3.3%. So why do you think? Why are you still forecasting 3.3% GDP growth for Nigeria?
So at the beginning, when we did our full year reports, that was when the focus was at 3.3%. But like we all know, the MBS had done a rebasing of both the CPI and the GDP. And I think for the GDP, the base year was moved from 2009 to I think 2019.
That's right.
But now in July, we don't still have the data for the rebased GDP. So it won't, like it doesn't make sense to kind of focus on what you have no direction of. So we don't know what the new GDP figure is. And also, the MBS also talked about adding some new sectors into the index calibration. So we don't know what those sectors are and how those sectors would impact the overall GDP. So since there's no clarity on that yet, the figures hasn't been released for both Q1 and also Q2. So that's why we left the forecast still unchanged at
awesome. Inflation, that I think 24.7 is what you guys have. What's with the triggers behind your forecast of inflation for 24.7?
So for the inflation, we've known that the MBS is going to do the rebasing, and the rebasing kicked off in January. If I'm correct, it kicked off in January, and we've been seeing a kind of decline in the inflation, and that's kind of part of what drove the title of our report, that beyond silver lines. Because if you look at the data, at the raw data, it looks like yes, there's a bit of improvement, statistical gains, but if you look at the word on the street, what are people saying about it? So beyond just having it good on paper that yes, inflation is declining, we need to see it translate into the average Nigerian, because what the average Nigerian is concerned about is that how much was bread last year, how much is bread now. So whether there's rebasing or no, what is the cost of food in the market? So that's what people are really after. And yes, we've been seeing some declining in the inflation, but while the projection that by November, December, thereabout, we're likely to see a spike in inflation because
festive activities,
and also
because
the base year effect, because the rebasing was done in December, so that could also wane. But on the average, we think that inflation will still be around the region of 24%. Because I think currently it's about 23.7%. So it's not far from
where we are now.
Projection.
Exchange rates. You guys had. Oh God, these are reports. You could do the whole show with this thing. 1,800. That was your prior forecast. You've now at 1,577 per dollar. What's behind that?
So earlier on, when I was talking about the currency, it said that as at half year 2024, the naira devalued about 31%. So at a point, it was under 1.8, and people were kind of thinking it's going to hit the 2,000 mark. But based on the reforms that we've been seeing in the exchange rates, like I said, there's a bit of stability. So far, the naira has just slight decline of 0.6%. And based on the reforms by the CBN have been able to tame speculation in the market. There have been some reforms. I think as of December last year or so, they did the EFEMS policy like that, and also we've been seeing some improved liquidity in the market, OMO auction, and that has also weighed in on the improved improved naira, and we think that would stabilize towards the end of the year, because in a way there's a kind of correlation between the exchange rate and inflation. It has a way of kind of moving together. So we think that the naira would settle at around that 1,550 naira per dollar region.
Fantastic. Let's get to government borrowing. This is a big, awesome budget deficit chart that you have in your reports, where you're looking at gross federal collected revenue, net federal collected revenue, and then what's available to the government, and then the fiscal position of the government. You're projecting, I really like this chart. 17.2 trillion. I think we have a second chart where you've got that in terms of borrowings and so on. Yeah, so there it is. So for the viewers there in blue, domestic, and then foreign, in terms of the government's proposed funding mix and how to plug that deficit. So to the right there's Afrinvest estimated budget deficit of 17.2. So what's behind that then? Yeah.
So if we do a little bit of backstory and looking at how the revenue generation has been since this administration came into power, the FX liberalization and the PMS subsidy that was removed has kind of increased the revenue of the. But if you look at the 2025 budget, if you look at the key parameters in the budget, crude oil production at 2.1 million barrels per day. If you look at crude oil price around $75, and if you, based on those figures, those projection that or the revenue estimation of 21 trillion naira. But if you look at what's happening on the global space, that's kind of had a negative effect on that revenue projection. That we are still, our crude oil projection is still about 1.5, 1.6 there about million barrels. So it's still, we are still like 500,000 million barrels per day short of federal government's projection. And based on the oil price projection, I think as I checked this morning, oil is around 68. There was a time that was hovering around 50. So that could also weigh in on. So we think that if the government is not able to get that revenue projection, which is unlikely, and there's a part of our report that we said that for the government to be able to reach that budget,
I should have put that chart.
Yes, so the crude oil price should be around 100.
You estimated the revenues based on how much
based on
oil
what
output.
the federal government is projecting, should be around 100. But if you look at what is happening on the global space, Trump, for example, wants he wants crude oil price to be lower because that would help the inflation of US, and that could also play into rate cuts. So it's more like we are fighting against, let's say, bigger powers.
Yeah, exactly.
So that would also weigh in on federal government's budget deficit, and it will.
Real quick, I have to skip what the impact is to have on yields. Let me get to your sector very quickly. Equities. Why has consumer goods outperformed on the NGX, the index? What's I thought prices are high. We're talking about inflation just now. No, actually, let's skip it. This is the yield on federal government bonds. But then after this, so real quick, why is it that?
So if you look at the index, it has done about 16%, but the consumer goods has done over 50%.
There it is.
That's the sector that I track. So one of the things that we've seen is that for the major consumer goods company, the challenges that they had last year is kind of moderating. If you look at the FX challenges that they had, and also the raw material cost challenges that they had, and if you look at some companies, specifically PZ has already turned its financial performance. And I think they just released their full year report last week. They are now back into profit. So that has also weighed in the sentiment of investors that this is a sector that has been, let's say, affected negatively in the past 2 years. But now that the financial performance and the macroeconomic situation is kind of improving. There's kind of more demand for those stocks. If you look at Nestle, Nestle is also performing well. If you look at Unilever, and if you look at Honeywell has done about, I think, over 200% this year alone. So if you look at it, there's now more interest in, so even beyond just consumer goods, if you look at those sectors that were heavily affected by the FX policy in 2023, 2024, they are now kind of back into profitability. If you look at MTN, for example, MTN has...
Yeah, you guys
also,
have an ICT
yes,
index, right? That's
so,
one at the top.
Yes,
there,
that's one of the things. That's one of the reasons why the ICT index has also done 31%, largely because of MTN. And so what we are saying is that the sectors that were majorly affected by the FX,
rebound.
Yes, there's now a bit of rebound. And even our consumer goods report is now out, and also puts more... insight on why the index.
Okay, we have to bring you back to talk about that.
Yes,
you got to come back, talk about the consumer goods.
So that's what we are saying.
Nathan, you guys, look, I try to tell everybody, our asset managers in Nigeria are doing fantastic work. The amount of time you guys take to put this research together, put it out there for the public to digest, it's really great stuff. Thank you so much for your time.
Thank you very much.
You're coming back, consumer goods, all right? We'll dive into consumer goods. All right, yeah, you're watching the Global Business World. That's Nathanael Disu, investor research analyst with Afrinvest. Great stuff there, great.